inside the anatomy of a $2 billion beat. Today, we're dissecting Monster Beverage's record-shattering Q4 FY25 results to uncover the real operational drivers and hidden balance sheet red flags buried beneath the headlines. To understand the health of MNST, we're following a four-step diagnostic path. First, we analyze the milestone hook of crossing the $2 billion quarterly threshold. Second, we look at the operational mechanics driving growth. Third, we perform forensic adjustments on cash flow and stock-based compensation. Finally, we deliver the verdict with a bull versus bear risk-reward matrix. History was made this quarter as Monster shattered the $2 billion ceiling for the first time. Q4 net sales surged 17.6% year-over-year to hit $2.13 billion. This momentum carried the full year of 2025 to record sales of $8.29 billion, marking a 10.7% annual increase. The executive scorecard shows a robust double beat. Non-GAAP EPS landed at $0.51, a 30.4% jump from the prior year's $0.39, while GAAP net income rose 65.9% to $449.2 million. Adjusted operating income reached $617.6 million once we account for alcohol impairments and stock-based compensation. Despite intense input inflation, Monster's strategic pricing power won the day. By implementing pricing actions and optimizing the supply chain, they expanded Q4 gross margins by 20 basis points to 55.5%. This successfully offset the downward pressure from elevated aluminum costs. The core energy drink segment remains the primary growth engine. Monster Energy Drinks alone generated $1.99 billion in Q4, growing 18.9% year-over-year. Meanwhile, strategic brands like Predator, Burn, and NOS contributed $110 million, showing steady 7.8% growth. Monster is officially a global powerhouse, with international sales now representing a massive 42% of total revenue. Total international sales hit $903.3 million in Q4, up nearly 27%. The standout was the EMEA region, which saw an explosive 32.6% growth in dollar-denominated sales. However, there is an anchor dragging on these results. The alcohol segment saw a 16.8% decline in sales, dropping to just $29 million. This segment is in a costly transition, racking up $51.2 million in impairment charges this quarter alone. Crucially, this drag is masking the 18.3% organic growth of the non-alcohol portfolio. When we look at the bridge from GAAP to non-GAAP, we see how management arrived at that $617.6 million adjusted operating income. We start with $449.2 million in GAAP net income and add back the $51.2 million alcohol impairments and $39 million in stock-based compensation. Note that operating expenses were only kept in check because lower impairments offset rising payroll costs. The balance sheet is a fortress with over $3.25 billion in total liquidity. Monster reports zero outstanding debt after repaying a $750 million term loan in April 2025. With $2.09 billion in cash and $1.16 billion in investments, the company has massive dry powder for future moves. The quality of these earnings is exceptionally high. FY25 net income of $1.91 billion is tightly aligned with $2.10 billion in cash from operations. After factoring in $232 million in capital expenditures, we see a healthy free cash flow of approximately $1.87 billion. Here is our forensic warning light. Stock-based compensation is diverging from revenue. While annual revenue grew 10.7%, SBC surged 38.1% to $125.7 million. In Q4 alone, SBC represented 1.8% of net sales. When compensation outpaces revenue nearly 4-to-1, investors must watch for hidden dilution. So, what's the outlook? The bull case rests on EMEA's 30+% growth and a strong 2026 innovation pipeline of better-for-you beverages. The bear case focuses on the continued $53.7 million annual drag from alcohol impairments and vulnerability to volatile aluminum and freight costs. The four key takeaways are: 1. A historic $2 billion top-line break driven by core energy drinks. 2. An international engine led by EMEA. 3. Fortress-level liquidity for M&A. And 4. A dilution watch as SBC grows 3.5 times faster than revenue. What's your verdict on MNST? Does that explosive international growth justify the rising stock-based compensation and the alcohol segment drag? Drop your thesis in the comments below. If you found this Monster earnings deep dive helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.